What's up, Stephen Johnson? Stephen Johnson Stocks. Been doing this for a few years now with the sole purpose of being able to make this video, which is kind of the success result after 4 years of trying, to say that it was a good month, December, 7,000-ish, 7,000 plus after fees. But more importantly, I flipped an account in January, $660 into $66,297, which is 10,000% return on investment. A higher ROI than nearly anyone I've known, or if not anyone I've known. But if there's someone, please tell me. But this for me is the end result that I was looking for, the first bar before moving forward. And I'm extremely proud. I'll take a moment and I just want to look at where I was last year and look at where I am this year, or where I am now, and then we can go through some of the trades of the month. And I just want to say that a lot of it's down to the gap and crap setup that I've been mastering for years. And to kind of celebrate the success, I've put a coupon code for the 5+ hour guide on how I literally short gappers to pretty much get this full 10,000% return on investment, 660 into 66,000. There's a link to the guide below if you want the guide. I've put a coupon code so you can get it for cheaper. It's like $250. It's not 500. It's 500 for everyone else. So check that out, and I just want to show you the journey of my evolution over the last year. So when someone makes it in trading, they always ask what clicked. What was the magic moment? Why is the person you are today different to that man before? It's not that just something clicked all of a sudden. I simply repeated boring old habits again and again, over and over. Tracking data, saving charts, refining entries, a couple of hours a day, every day. And that growth compounded. And then slowly it clicked, and the results also compounded. So with IMMP, and we'll just go through a lot of the gappers because I've just released a guide on it, so I'm happy to give some free insights into it. IMMP is one of the more risky ones, but sometimes the more risky, the more profitable they can be. And there's a lot of warning signs on this. We do have this kind of history of gapping and failing, but it's on such low volume, and we've had repeated gaps and fails all the way along, but it's on such low volume that when we get a 52-week high volume gapper, biotech's not a good sector, although it has heated up. More recently in December it wasn't, other than the coronavirus ones. I know that this is trash, but I don't know how far they might run it before it comes down. The volume's just super high. The opening minute is super high, like 6 million, borderline ridiculous. The only thing that I thought is, look, it is trash. And until really January, biotechs hadn't really run historically multi-day. So I was thinking this will come down at some point, and I did feel like the move had been made. Do you know what I mean? It's almost like we got the move had already been made kind of here after hours, and then it just didn't break down, and we got this squeeze when everyone was expecting it. Or they, whoever it is, they've ripped it up. But with biotechs, unless it's like insane news of a life-discovering cure, the same thing's going to happen. Ultimately, this is going to come right back down. I'd imagine they've got dilution and they've just ripped it up just to dilute the hell out of it and get like a good price to take it from the 8s all the ways back down to the 2s. So with IMMP, very 52-week highs, big volume, everything's a warning sign to stay away. You'll see on the chart I attacked it quite early. I remember this trade really well, and I thought, do you know what it is? It's a shitty biotech. It will come down like all of the other ones, probably on day one, but it's just a case of trying to scalp a little bit of profit, so then I can take size, like if you've got the guide, like if I can take size like 10, 30, 11, to really hit this one back down when it fails. And that was kind of how the trade was. I knew it was exhausted from the pre-market move. We got like a little bit of a scalp. I was like, when 6 million volume cannot make the stock move more than 7 till 750. We can't even we got an 8% push on 6 mil. That either tells me there's dilution or there's a lot of sellers or there's a big seller above. So I took a little scalp, took a lot of it off. We still got this kind of, this nice, like firm, like minute by minute double bottom before you get the kind of the curve, and we took off. It also coincides with like a nice little wedge break, clear wedge break. It takes off, but we just don't really go anywhere. So I'm leaving it at this point. And then when this higher low isn't much of a higher low, I'm expecting it's gonna fail, and I'm just waiting for it to fail because I mean, like not really. I mean, look, we're still in an upward trend here as to like this, but it's when the new high isn't higher and then we fall through the trend that it's been like. Really bullish stocks will keep this trend a lot of the day, but when it fell through this trend quite heavily, that was the kind of the key at 750 to start taking some size. And when it made this confirmed head and shoulders lower low, we've got it here. This is a time to like really hit size. So I was in this basically throughout this time, but it was more small size, small scalps at the beginning. Try to build a bit of a cushion just when the momentum's not there on the front side. Then when we got this higher high, not really pushing again. As long as it's within this trend, it's not really something to short. You might want to be trying to get a bit of size just in case it falls through. But when I'm doing stuff like this, I'm trying to get a bit of size in like, say the 780s to cut at 8 if it goes through, because it still can. But I want a bit of size in the 780s because if it does fall through here, I'm gonna hammer it. And I don't like chasing weakness, but sometimes you have to. But like I'm chasing weakness, so I want to have a bit of an average at 780, so my average doesn't go down too much. And then as soon as we get this second bounce, this head and shoulders, that's when you're more inclined to think, all right, we're getting to the point of being done here. And it's just this this collapse is beautiful. We've got, and that's when you always know it's over. This is the main part of the move up play as well. You've got the double bottoms, rips through, perfect head and shoulders, slams, holds support, and then I was pretty much hitting, if you go back to the chart, really trying to kind of hit this lower high off the back of the head and shoulders just for the big. There's like a money move where the market makers move out, or the Robin Hooders give up, whoever it is. You get kind of two money moves. You get the fail of the trend break is the first time people give up, but then you've always got like the likes of Roland Wolf. I'm not sure if he bought this one, but you've also got, and he makes money doing this. You've got the likes of Roland Wolf buying these double bottoms, looking for the triple bottoms, and look, you'll make 680 up to 750 on that. You'll get your 5, 6, 7%, but then when that starts rolling over and it can't form this new trend of higher low, higher low, higher low, similar to this channel, this is like the main money move, and this is the safe move. I remember hammering some size around the 720s, thinking this is going to drop, and you've got like a good $1.50, $1.50, and then on this one you've got kind of like 750 to 650. So you've got like $2.50 that you can make by hitting this down. And I'm not very good at like reshorting these supports. I don't know why. I just don't have the patience. Like if I can get a couple of bucks in a second or 20 seconds in one drop, like I'm not going to just sit and let it fade, because if it does squeeze up something like it did in this area here, like I'm going to be really pissed off that I just waited 2 hours for nothing. Yeah, with ANPC, it's kind of as good as it gets. Again, biotech, shitty biotech, so bad I couldn't even run in the Biomania, but I mean, since its IPO, it's just done nothing but gap and crap. And this day here was the day that kind of got it when it gapped and crapped. Yeah, you can see it 2 years. It's not got too much chart history. The volume's nothing substantial. This falls into the category of pretty much one of the types of shorts that, with the volume and with the daily pattern, it's like, I'd like to see 90 plus % success rate. that I have with these, and it's all tracked and proven over like hundreds of gap as. So with this, it's just, as you can see, I actually took the first short and started hitting it either here or here. You can check back, and I was covering around here, and I left a lot on the table, but the science behind it is it always gaps and fails. We've got a lot of resistance here. The volume's not enough to break through. It's a biotech that's in need of money, so it's just finding where it's going to break down. And generally, the lower the volume, the faster in the pattern it'll break down. So I thought, I mean, instinctively, looking to kind of to get in here just because instinctively I think it's a bit overran. And then when we get this double top, the new high is not any higher. This is when I start hitting it in. Ideally, I'd have to look back at the chart, but ideally I'm thinking I'm hitting some extra size in here. And I mean, there's just not enough volume to scare me here. I know we're kind of bottoming, and as Dan Irish always says, if it's going sideways, it's bullish, and it's true. But with this chart, with this daily, with this volume, I'm just not getting scared out of this. And it's literally just a case of shorting the dips, covering the rips. We get this just really, really, really clean line. I mean, this line even extends to from here. We've just got this really clean line all the way down. I mean, don't cover unless it breaks trend, right? And then when you've got that kind of philosophy, then it's just really about there's a pop short, there's a dip cover, there's a pop short, there's a dip cover, there's a pop short, there's a dip cover. It's right against the resistance trend line cover. I mean, look, I get bored sometimes. I can't be bothered. Like, I mean, I only took 500 on this because I took like 800 on RSCF, an OTC play. So what you've got to remember as well is like I can only trade 4 stocks at a time. So I'm flipping from screen to screen to screen. So I'm just trying to be like, all right, like cool, like this is gonna fail. So anytime it pops, just short it, and then just I'm not paying too much attention. I mean, I should have made 1,000, 2,000 on this, but as in RSCF, I'm trying to learn OTCs, I'm trying to learn longs. So didn't take this with as much size as I should, and in hindsight, I should have. Now, MREO is one of my like favorite. I mean, look, you can say I'm shorting biotech after biotech after biotech, but MREO is one of my favorite trades for a number of reasons. Now, I mean, I made some mistakes obviously because the it's a good long because with this volume, making this range from 150 to 4, next to no volume, it's obviously a good long. If it can move that far on that volume, like what the fuck is it gonna do when it trades 80 million? So this is one of the exceptions where normally when something would trade 80 million, you don't expect it to have too much range in 2020, 2021. But its capacity and capability to move this range on this light volume, it's extremely scary. And if I remember the trade correctly, I was really kind of building in short because I mean, it's got resistance but on no volume, and it's trading significant volume. For me, I'll just tell you how to play it now and roughly how I remember playing it, but it's no short really here, but you can kind of scalp it. When this volume comes in and it's 400,000, it just looks like it's got resistance in these channels, in these areas around the 4s. We can see it's in the 3s. It just looks like it's another shitty biotech that's going to roll over at this point. So if you really want to scalp, and all it is a scalp, when this low volume comes in, you can take a little short in cover. I saw that, and I took it pre-market, and I took it at the open, and I did just scalp cover. But with this kind of history of huge range light volume, you've got to be ready to cover straight away. And my covers were, what I did really well, if you look back on the chart, is I took the covers right at the bottom. Now, when it breaks through the high of the day, you've got a little kind of red candle here, which is an immediate indicator. So the first story you tell yourself is, all right, the volume's light at the open, it's a biotech, The last time it ran on range, it's just kind of faded back off. Biotechs generally always fail. I'm just gonna scalp this down. That's the first story. But when the volume comes in, when you get the change in direction, then that's a different story. That's a different play. So I'm out, take me little profits from the threes to the 280s, 270s, like 8%. Not a good trade, just a little scalp. I'm not really interested in taking it for much money. I'm not taking it with size. But when we get this breakthrough high of day and you get this dip, I've already marked this out because this is a long opportunity. We've pushed, we've landed. I normally don't like buying high day breakouts, but when you've got this range on this light volume, you've got people shorting biotechs, you've got a shot. I don't love it, but there's a quick scalp there. I either took that long or I took this long. I took it both. Are good. That's not a bad long opportunity. I much prefer this consolidation and this trend break. When we get this trend break through, I absolutely love this because the daily's good, the shorts are squeezed, the trend breaks in. We've held a high of the day. We've got two kind of bases, higher lows from the 270s up into the 320s. We've held two bases, and if you're going long off the 330s, you're risking the 320s. And I took one of these entries long, wrote it up, and I like this because I took it both ways. And then the final thing is, once this thing gets overextended and the trend starts to break, we've got a few different stories here. So we've got this. It's not the perfect trend line. It's actually better. It's actually better if I draw it from here. We've got this trend line break, and we've also got the second indicator of the head and shoulders. I vaguely remember doing this on the gate as well. So we've got the head and shoulders, we've got the gate, we've got the trend break, we've got that, and then you've got this like short here from the fours. And not only that, but you've got this double top from the fours on the daily. So you've got three technical indicators as to why this will fail. Four, because it's quite wiggy and it gives back a lot of its gains. So you've got four technical indicators. The only thing that you've got long is the volume. And it has got the volume to break through this 4 level. And it did kind of break through the 4. It's exactly 4 resistance, right? Yeah, a 430. So it actually literally triple topped in the 430s. And look, you've got a safe short again. Like, what saved me here, because I was short. So with this, I was short, took profits, took it a little bit long, probably had some shorts in here as well. Had some shorts in here, had some shorts in here. So I'm shorting the tops and covering the bottoms. I'm having multiple stabs to find the top at this. And even if I shorted in this perfect entry here in the fours, if it goes to 405, 410, I'm just cutting it. And even though you could say, if you look back at me entries and exits, I'm short here. This is getting messy. Let's just clear it all off. I'm short here. I'm covering here. I'm short and long in this area and channel. But from the shorts, I'm covering them here. Then I'm short here. And then I'm covering them here. Then I'm short here. And I'm covering them all the way down. You can... and this is it was the same with BLNK, AYRO. It's the same with the OTCs. If you cut your losses at 1% and you stick to the rule that short and front side also means cover and front side, it takes time to get your tape reading skills and your ability to read the level 2 to this level, but you will you can break even. You can break even shorting the rips, covering the dips, shorting the rips, covering the dips, even though the overall trend is up. As long as when you're wrong, when you cut your losses at 1% when you're wrong, and also make sure you shorten front side, covering front side, not just adding. And when you're right, you're still gonna pick up these 4 to 370, or these scalps 350 down to 320. And again, you can be on the wrong side of the trend but still make money. I'll never forget, I made $900 on one of BLNK's biggest squeeze off blow off top screen days before it reversed. I still made 800, and then I banked even more when it actually did come down. But again, this is how I trade. I've been doing it for years, but to teach you the right trade, don't short it because it's got a history of running on no volume, so don't short it. If anything, take it long. Just take this clean break. I mean, I think that's arguably the long. When that breaks trend, you've got a long at 280. It's got a history of ripping on no volume. It's got volume. You've got the volumes just come in. The trends just broke. That's your long. And if you miss that one, just take this next one. But you've got to remember, ultimately, it's a shitty biotech. So when the trend breaks, when you get the confirmation of this fucking, it's not a Head and Shoulders, but it's like almost like this wonky weird Head and Shoulders and the trend break in the triple top, then flip bias. I made money on the long side and the short side. Went on a bit with that one. I hope it makes sense. And that's a wrap. That's a wrap. So basically what I've done is I've gone through 3 of the gappers that I've shorted this month and made money. Straight from the strategy, from the guide. But what I've done is I've not shown you the easy ones because I really want to show you like the more difficult twists, turns, intricacies where there's fine arts and price action, because I think that's what you're going to get the best lessons from. There's a ton of easy gappers where it's just like high volume resistance, not a lot of volume on the day, not a lot of volume in the opening minute, short pre, cover the morning wash, like, and it's textbook, but that's not what's going to bring on your price action, which can be then related to other trades. So the dream is real. It's very possible. I'd like to think I've started to get there, done it. Certainly mastered one pattern. And I mean, look, I'm just excited for the year ahead and just hope to hit 100k a year, which will be 160, 170 in my career.